That the premise of the report that I published was really a relative value trade because nothing is trading at any of these levels, including the stock market, if interest rates, I'm talking about in the treasury market, were as low as they are right now. So what we did was we went through all the different parts of what's called spread product. So we went through high yield and investment grade corporates, asset backs, mortgage backs, credit cards, the whole gamut. And we actually found that in the muni space, it's actually the only part of the non-treasury segment of the bond market that's trading at interest rate spreads off the government bond market that's higher than they've been in the past. So it was really more a relative value trade that they're basically trading off of treasuries much more attractively
Right.
than all their competitors in the credit space.
Is there concern? I mean, right now it seems like if anything, state and local governments are flush with cash because I keep seeing these headlines about, California and New Jersey and they're returning, money to taxpayers and all this different stuff. Is there some longer term concern? I don't know if munis are typically a 5-year product, but concern about the, soundness of these funds. Is that why the spread would be higher?
Well, I think a lot of it, Kelly, was because the muni market got absolutely smoked, during the pandemic and in the aftermath. I mean, everybody thought that the housing market was going to implode, that municipal, state, and local government revenues were going to tank. And so what we found out since is that, you consider where they get a lot of their revenues is from property taxes. Well, look at what home prices are doing. I mean, we got the housing data today. Resale prices are up more than 20%. So the revenues are just going so much stronger. I mean, people talk about, look, you're buying core equities right now because everybody's talking about how strong the profit streams are. Well, look at the revenue streams. So they're bringing that in. On top of that, there was a huge gift from Joe Biden in March because part of the fiscal package was that $350 billion of federal government transfers to state and local governments. And at the same time, it's very interesting to see that they're still holding the line on costs so that even as the economy has come back, when you're taking a look at employment in state and local, and it is a very labor intensive part of the economy, employment is still down more than 5% from where it was pre-pandemic. So if you're taking a look at state and local governments, as you would a corporation, in terms of the revenues they're bringing in, benchmarked against the costs, their income statement is looking phenomenal.
Interesting.
I just don't think it's fully priced in because when you measure where their spreads are relative to their history compared to other parts of the spread product market, I still think this thing has a way to go.
So let me ask you one final question. We don't have much time left, but that maybe could kind of be of interest both to muni investors and the investing public more broadly. Do you think the 10-year benchmark yield should be down here around 1.2% for a considerable period of time?
Well, I actually, along with Scott Minerd and some others, were actually, when the yields got to 175 on the 10-year, I was in my daily saying this is overdone and we're going to get down towards 1%, which we almost did. So do I think that bond yields should be where they are right now? I know that people are going to say, well, inflation's too high, but I think inflation is going to come down more than people think next year. But I think more to the case on the 10 years, I think the real rate's going to go more negative because I think actually third quarter GDP growth is going to come in close to zero. And I'm looking at a consensus that's still 7%. Nothing I can do is going to get me close to 7% third quarter growth. So I think that as the economic surprise indices come down, you're going to find that the 10-year Treasury note yield probably is going to go back and retest those lows of last week, if not go lower. So I'm actually quite bullish on the Treasury market right now.
Wow.
Shepard Smith here. Thanks for watching CNBC on YouTube.